All right, guys. Well, first of all, I want to thank you guys for having us today. My name is Mercedes. I'm the host of Mercedes in the Morning on Mix 94.1. I also host a television show in the afternoon called Las Vegas Now, and I am the in-arena host of our pro women's volleyball team, the Vegas Thrill. So I have a bunch of jobs, and I would love to tell you more about financial literacy today. And I'm going to introduce you to the man who knows way more than I do in just a second, but I want to run a little experiment before we get things started. So if you guys don't mind, will you all stand up for me for a second? Okay, I'm going to ask you a series of questions, and if the answer is yes, stay standing. If the answer is no, I want you guys to sit down, okay? How many of you have a savings account? Yes, yes, stay up. If you do, stay up. How many of you automatically contribute to your savings account monthly? How many of you are saving for something specific? Well, if you're already down, stay down. Yeah. How many of you have reached your savings goal? Oh. Then I was going to ask, how many of you have a checking account? Anybody have a checking account? Yes? And how many of you have a debit card? Oh, you guys, a lot of you have a debit card. All right, well, I'm going to give you guys some towels here. These are cooling towels. Who still had the debit cards? Raise your hand if you had the debit cards. These will come in handy during the summer months for sure. Get you some back there. Woo. They do throw well. Oh, not as I jinx myself. Here, can you pass these back there? Okay. All right. Oh, right here? These are all important questions to answer and look at the way you are saving money. Let me introduce to you Scott A. Arkills. He's the CEO and president of Silver State Schools Credit Union. Can you guys give him a big round of applause?
Thank you, guys.
We're going to talk about all the things we just mentioned, all the questions. A lot of you stood up, so I was actually very impressed. And Scott, you really are the go-to when it comes to financial literacy. Let's start off with something that a lot of adults ask me. You are with Silver State Schools Credit Union. How is a credit union different from a bank?
That's a great question, Mercedes, and this is a question we get asked all the time. And so I'm actually, we call ourselves reformed bankers if we've been a banker before, because we think being a part of a credit union is a better way to do things. So the difference between a bank is you actually take your profits and give them back to the shareholders, the people that are the stockholders for the bank. With a credit union, what we do is we take our net income or our profits and we return it back to our members. And we do that in a number of ways. We do it with less expensive auto loan rates and home rates and all the different kinds of loans that you can get. But we also pay higher dividends than the banks do. And I'll just give you an example of that. Silver State Schools Credit Union, on your basic savings, which some of you mentioned that you have, we pay 10 cents on the dollar in interest on those accounts, and guess what Wells Fargo pays and Bank of America pays? 1 penny, sometimes nothing. And so they're not actually even returning it back to you. You're, from our perspective at a credit union, you're our most important commodity. If you're a member of our credit union, you are our most important commodity. And so from that perspective, we like to differentiate ourselves. And if it's not in the way of lower loan rates and it's not in the way of higher dividends, we also take our money and return it by giving you more technical things that you might think a bank has over a credit union. They don't necessarily. We've got the same items that they do. And so that's the primary difference is we give our money, we're not for profit. And what that means is we give our money back to you, the members, and the banks give it back to the shareholder, and often don't return it to their customers. And they call them customers at banks. We call them members at a credit union.
Yeah, it really is like a team that you're a part of, and you you will definitely notice the differences as you open your first bank account, your first credit union account. Keep that in mind. A lot of you already have them, and you can join both. You can open an account at a credit union. What's great about Silver State Schools Credit Union is you guys are already eligible, you're students, so you're automatically qualified to open an account there. What other qualifications do you need?
So, and now for Silver State Schools Credit Union, as Mercedes said, you can, as students, you're all eligible. Literally from the second that you were born and thought about going to school, you could become a member. We have you start at basically age 0. And so as a student, as a teacher, as an educator, a lot of people think because schools is in our name that only teachers can belong to us, and that's not the case at all. All students within Clark County School District or charter school or private school are eligible for being a member here at Silver State Schools Credit Union. So that's the great thing is we're pretty all-inclusive when it comes down to it.
Well, let's talk about that a little bit. Some of you mentioned you have accounts already. As a high school student, what type of account should I get?
That's a great question, and this is one that we get all the time. And so, from our perspective, now a lot of you raised your hand or stood up or sat down during the basic savings conversation. So that's one of the accounts that we have as a basic savings, and I'm going to actually let you know about. In fact, you'll be the first ones we mention it to, believe it or not. I'll let you know about a couple of things that we're rolling out, but basic savings really, really important. A lot of people say, hey, I don't even have a checking account. I don't keep a checkbook. Who needs a checking account? There are actually still people, Mercedes and I probably have people that we have to write a check to still, whether that's our pool guy or the guy that's the gardener or whatever. Every once in a while, they only take checks. And so, from time to time, you do need a checking account. And with the checking account comes what a lot of you guys had as a debit card. And debit cards they're tied to your checking account, and so it's an in and out account to be used for that. So the things that I wanted to mention that are the great new things that we're going to roll out is one of we call them our core values is we call ourselves Smart Pros, and it stands for their acronyms for the different things that are important to us and as our core values. And so what we've done is we're rolling out some smart checking accounts and smart savings accounts. So a smart savings account, you can actually start that at, again, the second that you're born all the way up until you're 17 years old. But we also have the smart checking account that's coming out. And that smart checking account is specifically designed for 10 to 17-year-olds. And how many of you guys are still 10 to 17? Everybody.
Pretty much everyone.
So yeah, and so this is designed specifically for you with different benefits tied to you being a student, quite frankly. And so those are the important things that we're trying to do. And so those are some really, really important items.
One thing when I was your age that I knew nothing about, and you guys probably know a lot more than I did at the time, is credit. Like, what is good credit? Oh, I have a good credit score. I have a bad credit score. I knew nothing about that. Yeah. So let's talk a little bit about that. Why is that so important to establish credit, first of all, and have good credit?
Yeah, and that's a great question. So credit is, I'll call it your lifeline to everything that you want to do in your future and in your lives, and that's why it's so important that you guys establish credit and make sure there's good credit all along the way. And there are certain ways that you go about that. Now, one is obviously you're never late on a bill. And so you want to make sure that you're consistently paying things on time, every time, and whether I'll talk about. I know one of the things we're going to talk about is a secured credit card. One of the things you can do is you can secure. It's called a secured credit card because you secure it with your savings. And it's a great way to actually establish a credit history. You can have that reported if you want to. I always say, especially if you're a student, if you guys' age, Absolutely, you want to establish that credit, because every time that you pay something and pay it well, and the secure credit card is a great way to do that. Is every time you do that, your credit score goes up, and so you're establishing a credit score. This is, I call it your lifeline, because it's it enables you to get an apartment to rent, when you guys are of age, or when you're going to college and that kind of thing. You're going to need to get into an apartment. Well, you're going to want to have good credit, right? How do you drive around? Well, you got to have a car. If you want to get a car loan, you have to have good credit again. So again, this building of credit's a lifeline. So I'm a lifelong credit guy, actually. I started my career 42 years ago in credit. On the other side, where you're actually, I call it dialing for dollars, where you're making repossessions or making collection calls if somebody doesn't pay their bill. So I've been on that other side too. But then I've been a chief lending officer, a chief credit officer for both banks and credit unions, and I will tell you that credit is, again, that lifeline to everything that you do, and establishing that.
So how does someone their age go about getting a secured credit card?
Yeah. So you just need to apply. Now, there's a couple of things. As if you're underage, you can actually apply with your parents and it's called a joint account. And your parents would be the primary on that. And again, we just mentioned the secure credit card. That comes with really no loss exposure to your parents or you, because you're going, yeah, sure, mom and dad
Mom's
are
not
going to
sign that.
I'm not doing that. Yeah, I don't know if you're going to pay it or not. Well, secure just means what you do is if you have $200 in savings, that's your security. Okay, that's the collateral that we have to back up that credit card, and then you just pay down on that credit card. And that's if you had a $200 secured, or let's use a more realistic number, if you had $500 on that secured credit card, you could spend up to $500. You make payments on it as you usually would to lower that balance, so you have more money available to again make more charges on that. The more you use it, and the more that you pay down on it, the higher your credit score is getting, because that's just the beginning to you establishing other credit, like the auto loans, like I mentioned, secured other secured credit cards and that type of thing that you want to get.
And that's different from a debit card, because the debit card is just coming directly out of your account.
Yeah.
It's not coming out of there, but you do have that cushion that
Yes.
if you don't pay, the bank says, okay, well, it's secured.
Absolutely.
Okay.
And the good thing and now I just compared ourselves to a bank from a technology standpoint. We have online banking like the big banks do too. So you guys can look at your balances. You can manage everything online. And let's face it, we're in the 21st century. When I was a kid, what's an app? I don't have an app. I don't have an iPhone. I don't have any of that stuff. And so that checking account I was talking about before, you'd literally put a register together, and you'd write down every transaction, and that's how you kept track. Well, I would tell you right now, you guys, you have the ability with online banking to see everything that you're doing, what's coming in and what's going out of your accounts at all times. So it's a lot easier to manage your accounts.
It's so easy. I pay my bills on it. I just press a couple buttons. My car payment, send it, it's done. So it's really a nice luxury. You don't have to worry about that stuff. How does someone their age go about? Okay, we've talked about the secured credit cards, but
Right.
What are some of the pros of credit cards? What are some of the cons of credit cards?
Yeah, so Mercedes and I talk about this a lot. I like to tell an analogy about my son when he went to Purdue. And he was going to be in aeronautical engineering. He was top of the class in Indiana, and he was doing great, and he thought he knew finances a lot more than he did. Well, he went to Purdue, in these days, and this was he's 38 now, so this is 19 years ago, 19 or 20 years ago. He went into the registration for all the new students, and guess what? Every bank was there, not the credit unions, thank goodness, but every bank was there, and they were handing out credit cards like they were candy. They didn't tell you about what's your responsibility for how you pay these and everything. What did he do? It didn't matter if he was, he had a 4.95, GPA. He had everything going for him and everything, but what he didn't know how to do was pay his bills. And I wasn't living with them, sadly, at the time, and so I couldn't really counsel him on that. But the hard thing is he got himself into about $80,000 worth of credit card debt because he didn't know any better. Nobody was teaching him about financial literacy or what to do with those credit cards. So he just thought it was an open avenue to, I'm going to use this card, I'm going to use this card, I'm going to, charge this, and I don't have to pay for it either. This is great. It's the best thing since sliced bread. And so, unfortunately, with $80,000 worth of debt, we had to have a team meeting, my ex-wife and her husband and my wife, and I had to have a family meeting, and we said, hey, listen, you're dropping out of school until you repay that debt, because that's the way we're going to make it happen. And so I always like to tell you that, because nothing's free in life, and you guys are a lot more exposed to this than we were as kids, because like I said, we didn't have smartphones, we didn't have all the emails that you guys are getting with all the offers that you're getting. I'll give you a piece of advice, especially with credit. If it sounds too good to be true, it is. And so you just want to be aware of that. And thank goodness a lot of the Congress people in Washington D.C. put a stop to that unauthorized giving of credit cards to students. And so what we're here to tell you today is again to teach financial literacy to you just a little bit here. Teach financial literacy and tell you how to do it the right way with a secured credit card.
Yeah, and I just want to reiterate on your story about the credit cards at college. Watch out for that. I know a lot of you said you want to go to college. There will be like the big get-togethers, and they're all having their tables, and we'll give you a free T-shirt if you sign up for the credit card, and you literally are like, a free T-shirt, cool, and you are signing. I hate to say signing your life away, but you really are. Yeah. And I didn't get into that much debt, but I did get into debt in college too, because I didn't realize, there's a bill that came. I have to pay for this now. Yeah. You just, my friends are going out. Yeah, it's on me. Oh my gosh, the biggest mistake. So if there is one piece of advice I would give you, it's don't fall for that. Yeah. If you're going to open something, like the secured card is a great idea. Go to your credit union, go to your lending establishment, and I would say do it through them instead of just some Joe Bob's credit card available with a 35% interest rate. It's absolutely crazy. What is the most important piece of advice that you would give a student today in starting their financial journey? Yeah,
and that's a great question. With your financial journey, what I want you guys to take it as just to be slow and be thoughtful about what you're doing and how you're building your credit. And an institution like Silver State Schools Credit Union actually does care about you, because we're the education credit union, and so it's from our perspective, it's kind of our destiny to make sure that we teach financial literacy, and that we're very smart about that. But how many of you guys, we did Bite of Reality, I think, late last year, I think for this classroom, right? How many of you guys did? Oh, did you? Okay. So that Bite of Reality, that's a good example of like budgeting. Budgeting super, super important, because, Mercedes was just talking about, hey, I was taking my friends out and I used my credit card because I had that. I guess I do have to pay it back. Well, that's a real story. So you need to. That's one of the first things that we teach is budgeting, and we've got a couple of things that we have at the credit union. We have a thing called Balance Program, and they actually have financial counselors, and it's free. If you're a member of Silver State Schools Credit Union, you can call. They'll work up a budget for you. So if you've got $1,000, if your job pays you $1,000, they'll work up a budget and go over your expenses with you and talk to you about that kind of thing. So budgeting is really important. Opening that checking account so you know what you're doing. Having that debit card. The more you use these things and build it slowly. Again, it's kind of like laying a foundation for your for your future and how you're doing it. But again, this is the lifeblood. This is the lifeline to everything you're going to do and everything that you're going to acquire in life. And it's getting harder. You guys know the price of gas. Everything's going up right now, and our economy is kind of circular and cyclical. It keeps on coming back to a place where it's a little bit easier and everything. But you got to learn how to get through the tough times, and that's what our financial literacy and financial wellness. We call it financial wellness. The second part of it is because through financial literacy, you get to financial wellness, and that's what the end game for all of your careers, your credit careers, is going to be.
You guys are really ahead of the game, just at your age, already kind of knowing a little bit and being interested. Like I said, at your age, I had no clue what any of this meant. But we do want to open it up to questions. If any of you guys have any questions for Scott. 1 second. Time out. We got the wireless mic here. Let's see if it works here. If anyone has a question, we'll pass the mic over to you and try to answer it. Does anyone have a question they want to ask? Yeah, right up here. All right. What is your name?
My name is Azaria Chan.
All right. What is your question?
So before you mentioned that Silver State is an education credit union.
Yep.
What's the difference between an education credit union and a credit union?
That's a great question, and so we call them really. It's kind of a SEG-based kind of thing, and SEG stands for Special Selected Employer Group, and so with that, what that means is there's different. I'll take as an example Clark County Credit Union. They support the firefighters and the nurses and that kind of thing. Now, if you live in Clark County, you can be a member of that. Silver State Schools Credit Union, again, was created for teachers and for students. But it's kind of like it's that select employee group, and that's how most credit unions were set up. Now, there are credit unions like one Nevada is an example of this. Is they're called a community charter, and that means just like a bank, anybody in that community can join. If you go to church in that community, if you're a student in that community, if you work in that community, you can be a member of that credit union. And so there's many different credit unions. Believe it or not, there's 4,800 credit unions in the United States alone, and about the same number of banks.
Great question.
Great question.
Anybody else have one? Yeah, right here.
Hi, my name is Sarah Shemis. So I'm going to get a job soon. So then I was asking, what's the best way to save? Because, I'm still a sophomore, so, I'm not still going into college and all that type of stuff. So, I want to know, the best way to do it in a safe way.
And that's a great question. I always like that question because, we actually, we with our, what we call our focus schools, we actually had a thing called a piggy bank program through Anson, and it was something that we thought was a great idea. And believe it or not, these were special needs Title IX schools, and it was an interesting thing because the kids didn't have a lot of money to put into savings, but it was actually a savings program that they had. And so I always say, so what you want to do is whether you're getting an allowance right now and whether you're going to get a job, set aside a certain percentage and say, hey, this is what I want to dedicate to that, because that's going to be your spending money. And if you're getting like one of those secured credit cards, you want to build that savings account up so you have enough in there. I'm a saver, and so I always have been for a lot of reasons. When you have a wife that bounced a check on you early on in your marriage, you go, oh yeah, I better have extra savings, and because you never know if things are going to have things come up like that, and so you gotta make sure that you have enough in savings to do that. So I say take a certain percentage of that, know what you want, and that's part of that budgeting thing. And again, our credit union will help you with that budgeting thing through the balance program, because we can actually establish, whether you're making $500 a month or $5,000 a month, you still need a budget, and you still need to know what you're going to save and what you're going to spend and what you want to dedicate to savings. So it's a great question. It's just something I always say, think of it in percentages, I think is the best way to do it, and have a target percentage that you want to have for savings.
I know that when I would get paid, let's say I made like $200, I would say, okay, I have to pay myself first before I pay anyone else. So 40 of it, I'm paying myself. And then I would put what was in my checking, $40 into the savings, and pretend it never existed.
Yeah.
Like, just forget about it completely. It goes into savings. And then I have the rest for my spending money and stuff, but at least I got that. And then just gradually, month after month, it starts building up. And before you know it, you look and you're like, wow, I just saved $200. Like, no kidding. So I think you're absolutely right. Just take like a percentage or a flat amount and just say, I am paying myself first before I pay anyone else. And you'll be surprised at what you can accomplish.
Well, and plus, so we call them compounded interest too. And so that compounded interest, because we're paying interest on that, the more that you put in there, the more interest that you're making too. So it's not like you're just throwing it in a hole and you get nothing out of it. You're actually getting a dividend, and that's where a credit union. We just talked about the credit unions and how each credit union's different too. Our credit union happens to pay more in dividends. We paid, as a credit union last year, our credit union paid our members $11 million in dividends.
I have a funny story about that.
Yeah.
My daughters both have accounts at Silver State Schools Credit Union, and they got their statements. And my oldest goes, why is there more money in there than I've put in? And I was like, that's because you got the dividends. She's like, what does that mean? I'm like, they're paying you. And she goes, I get money for free just for keeping my money there. And I was like,
Yep.
Absolutely. So it was like a nice surprise for her. She had no idea why she had more money in there than she put in.
Well, and it's not just your age where this affects too. So it's great that you just told that story too, because I was just thinking, I just talked my mom who lives up in Spokane, Washington, where I grew up. I just talked her into opening multiple savings accounts at Silver State Schools Credit Union. She's at a different credit union that my dad helped start, which used to be Spokane Railway Credit Union. It's now called Numerica. It's a huge credit union. But I asked her the question. I said, so how much she's only got, and this sounds like a lot, but at her age, it's not, because Dad just passed away last October. She's got $47,000 to her name. And I said, so how much is Numerica Credit Union paying you in dividends on a monthly basis on that money? And she goes, $15. And I said, Mom, bring it over to Silver State Schools Credit Union. We're going to pay you. And I figured everything out. And I said, based on today's interest rates and what we're paying in dividend rates, we'll pay you $216 a month.
Wow.
So we're literally paying $200 more than that other credit, and that's per month. So annualize that, guys. You guys are all smart in this room, but that's $2,400 a year. That's some big money. So, you're not just throwing it again in a hole and hoping it comes out. So.
Yeah, great question. Back there in the black shirt.
Yep.
What's your name?
My name is Laura Momo.
What is your question?
Should credit card debt be paid incrementally or all at once?
So that depends on how much, and that's a super question because most people cannot afford to pay it, all at once on a monthly basis. It's better if you pay it off. If you have the means to do it, pay it off every month. And the only reason for that is because you're not going to pay the interest charges, which they're known as finance charges in the business too. If you have a credit card and you have a balance, you always have to pay the interest unless you pay it on a monthly basis. And so it's also better from a credit perspective, and I'm super glad you asked this question. Just from a credit score perspective, the second biggest thing, so what did we just talk about? You got to pay your stuff on time, right? Okay, that's the biggest thing for credit and building credit. The second biggest thing is what we call debt utilization. And that's if you have a $5,000 credit card account and you have a $5,000 balance, you're 100% utilized. That's going to lower your credit score. If you have a zero balance and you have a $5,000 line, then you have 0% 50% utilization. That's what you're trying to get to. That will increase your credit score. That's 40% of your credit score, believe it or not. Didn't used to be, but it's now, it's a super important thing. And so I always tell you, if you can, for two reasons, you want to avoid the interest charges. And if I was a banker, I would tell you, no, keep the balance in there, and give you, because we want the interest charges. Well, that's not what we're all about. And so that is just a super question, because that hits right to the heart of using your credit smartly.
And you never want to pay more for something that you pay $100 for something and you just make the minimum payment,
Yep.
and then you have to pay more for it and more for it.
Right.
Well, just talking about credit and credit scores, what is a good credit score and what is a bad credit score?
That's a great question, Mercedes. So I always say if you have over a 700 score, that's really good. It's known as about a B plus credit score in our industry, and it'll buy you a lot of things as you go through your credit life. If you're in the 600s, as long as you're in the high 600s, you're going to pay a little bit higher rate on a lot of things, because auto loans, for example, they're tied to your credit score. Almost everything that you buy is going to be tied to your credit score. Even sometimes your apartments, not houses so much. It's that's if you qualify, then you're in, basically. But for car loans, for credit cards, for different things that are what are known as a tier-based system, then that's the case. There's also different credit scores. You guys will see a ton of different types of credit scores. Basically, most of them now go up. There's a couple that go up to 1,000, but your general idea is going to be 850 is going to be your top credit score. So that's what you're hoping to achieve. The great thing about almost every credit card account that you open today with us or a bank is you actually get your credit score. You have access to a free credit score, so you know exactly where you're at on a month-to-month basis. I look at it often and go, oh well, yeah, let's make sure that we're at the top of our game, because you want to have that purchasing power.
Yeah, it's really important to know what your credit score is, and when you get that, check it. You made a comment about like the interest rates based on your credit score. When I was buying a car this last time, I worked really hard to get my credit score back up after college, and it just was like terrible. And I got a really good credit score. So when I went to apply for a loan for my car that I was buying, I got a loan at 0% interest. Like, I didn't have to pay them anything to borrow that money, because they said, oh, your credit's good with us, we'll loan you the money. So that's what you want to strive for, those low credit scores, not low credit scores, low interest rates. And you'll get that if you keep an eye on your credit. And you can do that through the credit union. You can check your credit score. And then I believe you can go online, like Free Credit Report or something like that.
Yeah, I think, at least once a year, the Equifax is one of them that does it, and Experian is another one. And you can actually go in and check your credit score. I think, in fact, they may have increased it to even more than once a year, where you check it. But that's always a good thing to check your score. I'm glad you mentioned that.
Really good question. Anybody else have any questions? Yeah, right here. Why don't we go back there, since he's back there, and you've got the mic there, and then we'll come right up to you.
Yeah, we'll come.
Okay.
Hello.
Hi, what's your name?
My name is Ahmed. Do you mind if I ask 2 questions?
No, please.
So what would the requirements to join the Silver State Credit Union be, and would you, or I'll let you answer that one first.
What are the requirements to join?
Okay, so the first one is that one's an easy one. You just put an application in, and it's online. And again, as a student, you're eligible for that. But believe it or not, as a student, your parents are also eligible for membership at our credit union, because that's how we base everything, is if you're tied to the education field at all. So you just have to make an application online. You do have to have you have to start with a $25 savings account. And I don't know, is this So this is as good a time as any to you guys as part of being here today and listening to Mercedes and I. We're going to give you access to our smart checking account that we talked about. But you have the ability to open that up with $25, and then you build upon that. It's a matter of whether you want to build upon that and whether you want to bank primarily with us. That's what we want you to do, quite frankly.
Giving them the $25 to put in there already.
Yep, we
That's
are.
Really
we're
cool.
giving you $25, and so in fact, I think they're passing around this right now. But this is our new smart checking card, and this is the debit card, right? Yep. So, and you have access. You guys can pick the color of this. It can be white or black, and it's got the green apple. We tie the apple because you guys remember that the apple's synonymous with what you give to your teachers and that kind of stuff. And so that's how we started with the apple theme. But that I think they're distributing those to you guys right now. But that's how you join, and you just go online. We can help you with that too. And in fact, Abel and Dre and Ralph and I can certainly help you with that as well. So, and then you had a second question too.
Right. So if do you if you graduate, if you're in college and you graduate, do you lose eligibility for the
No, not at all. You're a lifetime member. Once you join, until you take the money out and stop banking with us. But the good thing is and I always tell everybody. In fact, I heard a commercial for One Nevada the other day, and they said, "Hey, we have ATMs for 42,000 locations nationwide." Well, we have about 80,000 locations nationwide. You can almost go to any credit union. Put your Silver State Schools credit card or debit card in there and take cash out without any fee at all. And that's what you guys are after. You go into a Walgreens, you go into we even have our ATMs in Targets and in Costco's. And so yeah, and so that's one way that you can do that, but you never lose your eligibility, and you can build upon that forever. So.
Your questions have been so good.
Yeah,
Can I
really
just say that was a great question. Thank you so
Yeah.
much. All right, right up here. All right, what's your name?
Michael Duhart.
Michael, what's your question?
And I have two questions as well for Mr. Arkills.
Okay.
My first one is, you talked a lot about the secure credit cards.
Right.
Am I understanding this correctly? If you have enough savings, then you're incapable of making a late payment.
Well, it's always secured by that amount that you have in savings, and so hypothetically, what you would do is we would withdraw it from that savings account, you're kind of incapable of it because you do have that as collateral against it, and so.
And the second question is, you said you offer a free credit scan or a free credit report.
Yeah, report. Yeah.
Could you tell us a little bit about the difference between, say, like a hard pull and a soft pull, like something from Credit Karma or something from
He
Silver
works
State
for one of the credit.
Wow,
reporting
that's
agencies.
impressive.
No. So that is a great question. So soft pulls are often used for us to do marketing type of things. And they don't have as much information. When we get a soft pull, we're asking for some basic information, sometimes just a score, but not the underlying data that's in there. And so in a hard pull, you're actually going to get every bit of information. So if your name was in there, Michael, it would let's just say your last name's Michael Smith and you opened 40 pieces of credit, it's going to have a reporting of everything that you've done over your credit career. And in fact, so I started opening up credit when I was you guys' age at 17 years old. I do have some creditors that have reported that long, believe it or not. Now I'm 64. So it's, you go that long, and sometimes it has that depth of information in it. So that's a hard pull. Soft pull, again, is used primarily for marketing purposes, just so we get a score.
So the hard pull would have like a larger history?
Oh, yeah.
Okay.
Yeah, hard pulls always have a lot more history.
And
so.
does that make your credit score go down when you have a lot of people
Great
inquiring
question.
on what your credit score is?
So that's a great question tied to that. Yes, inquiries count. You want to be selective about now. I will tell you guys, most car dealerships have signed up for a certain kind of credit things, and that's because if you're shopping for a car, right, you might go into 10 dealerships. They may all pull a credit report on you. Well, that's going to screw up your credit like you wouldn't believe, because every time you have an inquiry in there, it's another 15, 20 points that you could lose on your credit score. Well, what they did is they came up with what they call an auto-adjusted credit pull, because they know you're in the market. And so all it does is it takes the first inquiry and not, the 9 thereafter if you're looking at 10 different ones. And so inquiries are a big thing. You just want to be careful. Unless you know you're going to apply for something, I always say don't just haphazardly apply for things. Your credit score will go down because of it.
Be careful with that, for
Yeah.
sure. Awesome. Any other questions here?
I think we got one up here and one back there.
Right here, and then we'll go back there. Or we'll go back there, and then we'll come up here.
If you're
Okay,
closer,
yeah,
yep,
either one.
You're kind of in between.
What is your name?
I'm Noah Session.
All right, Noah,
And
what
so
you
we
got?
talked a lot about credit cards, and so I'm turning 18 soon.
Okay.
And so all of the credit card ads are coming in the mail.
Yes, they sure
What
are.
is something that we should be looking at in the hundreds of different credit cards that there are?
Great question, and it's the same thing I look for today. You want to look at the lowest interest rate. You want to, if possible, you want a no annual fee credit card, and then you want to look at the fees that they may charge for the credit cards, the different various things. If you bounce a check or if you make a late payment or that kind of thing, look at all of those different pieces. It's all in the disclosures, and they're required to have those. They didn't used to have as many disclosures. That's when a thing happened after my son was in college, unfortunately, but it was called the Credit Card Act, where we have to report a lot more information as a creditor, and especially somebody who distributes credit cards. And so that's one of the big things. Is the biggest thing, and another thing that a lot of people want to know is can I transfer from one credit card to another? Because sometimes credit cards will change. They'll say, you know what, we used to be a 0 annual fee, but we decided to hike that up to $50 a year. Well, no, what are you going to do? You're going to say, well, I don't want to pay $50 anymore. So what you do is you start to look for other creditors that have a 0 fee, and so that's your opportunity to do that. And so just be aware of those various things. And I always say, shop with those things in mind, because if there's a no transfer fee, that's your best bet on that. And so those are 3 things that I look at to this day. No fee, no annual fee on there, the lowest interest rate, and then can I transfer for free?
Thank you.
One other thing I learned early on, sometimes you can call the credit card companies and ask them to lower your interest fee.
Yep.
I had a couple that were, I think they were like high 20s. They were like department store credit cards, just ridiculous. And I called and I said, I've been a loyal customer for 5-6 years. I've paid all my bills on time. Can you lower my interest fee? And they did. They were like, sure, thank you for, we'll bring it down to 18 for your business. And so that's something you might want to keep in mind. It never hurts to ask.
Yeah.
So.
And guys, always feel free to call your creditors too and say, hey, I missed my payment. Will you waive my fee? For the month, and generally they'll waive your fee and waive your interest that they charge for that month. And so,
as long as you ask, though,
gotta ask.
Every single time I've done that, they've taken away the fee. They're like,
Absolutely.
we understand it happens. We'll take it away.
It's business. We just talked about we talked about comparing credit cards. I think ours is the best because we also give cash rewards too. We give 2% back on your cash purchases, so that's something you should always look at too. We have the lowest interest rate. Instead of charging, I will tell you right now, the banks are charging anywhere from 25 to 29% if you don't pay your payment in full that month. Ours is somewhere in between 8.9 and 13.9, and so we've got that lower rate and we've got no annual fee. So that's an example of what you're trying to drive for.
I know we're running out of time, but we want to get that last question in over there. You guys have been great so far. What's your name?
Great question.
I'm Desiree Granados.
What's your question?
I want to know, when you get a job, when do your taxes start? And how what would be the best way about filing them?
Uncle Sam's right away. No,
They don't wait.
Yeah, but yes, they'll start withdrawing taxes immediately, and that's a great question. And I'm glad you guys asked that kind of question, because we could do a whole thing on even on taxes, but they'll start taking taxes out of your check right away. You'll be able to pick how many deductions that you have, and you know, I've always gone the lowest deduction because that's the highest amount they're going to pull out. You can increase that if sometimes even students your age have kids, and if that's the case, you can claim that as another exemption on there, and that makes sense because you're able to write that exemption off as well. And so, but Uncle Sam will start taking it from you right away. The second that you start making money, they're obligated to, if they report to the IRS, which they have to do, then they will. So. Not if you're
It's
a
a bummer.
babysitter. The babysitter, that's a good gig because you're not paying taxes on
Oh
that,
yeah,
so.
they just hand it to you.
Yep.
Or Venmo.
That's all cash.
All right. Well, you guys have been absolutely incredible. We will be here just hanging out. But
Yeah.
do you have any closing remarks that you'd like to make, Scott, on anything?
No, other than, guys, we love doing this with you guys, because really the financial literacy thing is something that we're really trying to discuss and make sure that you're aware of. And we think that it's your age that is the most important, that we start having these conversations. And Dre, who's with us today, is even teaching your parents. Quite frankly, we've been going around town doing a lot of teaching to parents, because sometimes parents don't know any better too, and so it's a good thing for them to be able to tell you what to do and give you good counsel as well. And so we want to just make sure that you're on solid footing with that. I can tell you, for those of you that are interested in opening an account, we will steer you the right way, because we again care about how you're gonna establish your credit and how you're gonna live your financial life in the future. And again, it's the lifeblood to everything you do. So we want to make sure that you do it responsibly and that you have all the information that you need to do it.
Yes. And Scott, thank you so much for your great advice. Everyone, let's give him a round of applause. Thank you
Thank
so
you, guys.
much.
Thank you, Mercedes.